the reset that should be obvious to everybody has already begun. And we're hearing an awful lot of talk about inflation and that it's transitory and blah, blah, blah. Do you believe it? How many times can you be lied to when you do not know the truth? But the reality is we have had inflation robbing us of our purchasing power value since the day we were born. It's not transitory. You're losing your purchasing power by design, but now it is speeding up. And this isn't just a U.S. piece. This inflation is globally. So I'm not just saying this part of it in China because we experienced it here as well. With all this free money sloshing around, there are a lot of wagers and gambles on commodities, right? So on lumber, as we've seen, and this too is adding to that inflation. Now, yes, those numbers are now coming down, but history shows us that it never is transitory. It's the speed that will vary. That's the great experiment. And they will be really exporting this inflation on a global basis. Rising costs everywhere, in particular China, but frankly, everywhere will be adding to global inflationary pressures. You think? I think we are going to live with higher inflation globally, and what's happening in China will contribute to that, and what's happening everywhere will contribute to that, because China is still the world's largest exporter. So what happens in China is going to be exported globally. And much as they're saying that it's transitory, it takes a while for this inflation to work through the system. Do you think that they're not going to pass this on to the consumer, to you? And that's the other piece of this. They're talking about deflation. Well, that's not inflationary, that's deflationary. There's only one way to fight deflation, and that's with inflation. So much as they want to say, well, that's deflation and you're talking about inflation, it's really the same thing, wrapped in different guises: stock market implosion, real estate market implosion. Now, remember when they went to that average? And I said at that time, they knew that inflation was coming and they wanted to be able to justify running a lot hotter. So we'll see what they're going to do with it. Let's just be honest. The way that they presumably slow inflation down is via interest rates, raising interest rates so that fewer people borrow and spend. You want to heat inflation up? Drop those interest rates all the way down, print lots and lots of money, make credit really easy, which is exactly what they've been doing really since 2008. And even that little bit when they tried to stop, no. And in the meantime, it became apparent to everybody that understands the plumbing of the financial system in September 2019 that it was breaking down again, and they haven't resolved it. They're not going to resolve it because they don't change behavior. They just change how they account for it. So you have to ask yourself, does this look transitory to you? And it matters to you if you are holding any fiat money wealth, like stocks, bonds, ETFs, annuities, any of that fiat money product that you can only convert into the fiat money, because what inflation really is, it is robbing you of your purchasing power value. That's one of my favorite charts I show you all the time. But what the Fed is also doing is managing expectations. So goodness gracious, U.S. inflation expectations rise to new highs in New York Fed survey. And what is that new high? 3.6% from 3.1, same numbers, right? I hope it's only 3.6. But, they do take out different things. So they put in there things that you and I don't use. And yeah, maybe the prices of those are going down. But the things that we use on a day-to-day basis, those prices are going up. And they're going up quite a bit. And just think about energy as well. Back in February, in, in Texas. How would you like to have that electric bill? But that goes part and parcel with these very low rates and this easy money policy. So they're going, traders are going out on a limb because they expect the Fed has their back. Fed doesn't have your back or my back, but it has your back. And so why not? Why not take lots and lots of risk because the Fed or the central banks will bail us out? Really? Because somebody's going to be paying the price for this. Junk. It's called junk for a reason. Junk bond yields hit new low as investors are undaunted by risk. Really? Well, actually, you do see a lot of younger investors coming in, and they are undaunted by risk. They're playing a game, again, with the Fed's money, the Fed's stimulus money. But does it make sense that risky debt is paying the lowest yield ever? So at first, people were rushing into ETFs. But then they started actually selling. But what are they really selling? Are they selling gold or silver for that matter? No. They're selling shares of a trust that is created to and designed to look like the bogus spot market. So I'm really wondering, has confidence in the paper markets started to decline in earnest? I mean, I know I don't have any confidence in them, but I'm hoping that this is so. We'll have to pay attention to that. And has the shift to physical, are people opening their eyes and making that shift to physical? Central bankers are not gods. They have access to printing presses. They can change the rules so they can postpone things a whole lot longer than you would think, but they cannot do it forever. They just can't. And I know we're coming to the end, nor do they want to. That's a fallacy that people think. They don't want to. They want to postpone it until if they can make a smooth enough transition that we, the people, do not understand what's happened and we get caught up in it. That's one of the reasons why they like the markets to go up, because people are looking at that nominal confusion, the market's going up, instead of the real trend, which is the purchasing power value of the currency going down. And it doesn't matter whether it's in euros or in francs or anything else. All those graphs pretty much look the same.